This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on June 17th, 2011, approximately 8:49 in the morning Mountain, 10:49 Eastern. Our show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a show, you can catch us on Harold's website, HESradio.com, HESradio.com. Another crazy week on the financial markets. Increasing talk of a Lehman moment in Europe due to sovereign debt and a possible contagion from Greece. And it really could send shockwaves throughout the entire financial system and see assets come under pressure. We've seen the stock market roll over this week. Harold, it was a very dicey week. People worried about a Lehman moment as a result of what's happening with the sovereign debt crisis. This is something we've warned about for a long time and said it was not going away. And everyone's focused on Greece, but Ireland is just a bigger problem, and who knows about Spain and Portugal somewhere down the road. But a lot of financial landmines out there right now.
You better believe it. It's a very concerning time and confusing for a lot of people. So, again, listen to the show, and we will try to clear up these situations for you. The market right now, the metals markets are trading in a range, which they tend to do almost every summer. Gold is trading up 770 as we're taping the show. We're trading still above 1,500. Actually, we're very close to the all-time highs in gold. So gold is holding in there very strong. The silver market's up 13 cents right now. We're just under $36. We're building a very strong base in silver at around 35. We saw silver go from 50 down to 32.70. There's very heavy support in the silver market at $32, and I highly doubt we'll see the market dip below that. In fact, I'm pretty confident with the fact that we've seen the bottom of the silver market for this year. I think prices will go substantially higher. You've seen the oil markets under attack this week. Again, you know that the governments want to bring down the price of oil because it sort of hurts the recovery. However, in my opinion, there's no way that you're going to keep down the price of oil. They could bring it down to $90, which I wouldn't doubt, and there's very heavy support in oil at 90, but there's absolutely no doubt in my mind that oil is extremely bullish and will be $150 to $200 commodity within the next few years. There's no doubt that the world is consuming much more oil than they're producing, and even Saudi Arabia electrical company came out and said that they think that they'll run out of oil by 2030. So again, I'm very bullish on the oil market, and the reason that we bring that up is obviously oil is extremely important in our lives, but it's also extremely inflationary. One of the major reasons that we recommended gold and silver and hard assets 10 years ago was because of the potential of inflation back at that point. The fact is, over the last 10 years, we've seen certain situations happen that has solidified in our mind that inflation is probably going to be the number one problem that we're going to face down the road. Well, inflation is here. There is absolutely no doubt about it. And the only country that's not admitting to inflation is the United States. Because if they did admit to it, what they would have to do is raise interest rates. And by raising interest rates, that would hurt the stock market and the real estate recovery. Well, first of all, there is no real estate recovery. The real estate market in the United States is horrendous. And the problem is that the price of homes keeps on dropping and dropping and dropping. And because of the mortgage problems, obviously, we've seen the value of homes drop substantially, and that's where most Americans have their net worth. So as home prices keep on dropping, it will derail the recovery because nobody has any money to spend, and Americans felt rich, back 5 years ago when their home values were up because they would borrow it and use it as an ATM machine. But now that that's over, it's a major problem in the United States. But inflation is where you really need to focus on at this particular point, and there's potential of not only inflation, but hyperinflation. You've got to read the newsletter this week. It's packed with information. Randy did a phenomenal job on the newsletter again this week, and there's so many articles in there that you really need to look at because there are so many situations worldwide that are happening at once that you've got to be aware of what's going on so you can make the right decisions financially. Now, we're heading into the highest inflationary times that we have probably ever seen. In fact, the most famous time for inflation was back in 79 and 80, and that's when gold went to $850, which was record prices at that point. Silver went to $50, which was record prices. Oil prices were high, and interest rates went all the way up to 20%. thing is that we're heading very, very close to that situation again. The only difference is for the next couple of years, the U.S. is not going to raise interest rates enough to make a difference, which tells me that we're going to continue to see a major rally in the hard asset markets, meaning gold, silver, and diamonds. Now, you've got Ron Paul, who's a presidential candidate in the United States, saying that inflation is going to hit, and if you're sitting down, 50%. He believes that inflation in the next couple of years will hit 50% because of high oil prices and extremely high food prices and the situation with the U.S. dollar, which, again, is so extremely weak because they printed so many U.S. dollars that it just keeps on deflating the value of the U.S. dollar. China, their food costs push inflation up to 5.5% in May. So China's inflation is actually the highest that it's been in the last 3 years. The fact is that inflation is going to cripple the world economy. Inflation destroys $58 billion in savings in the United Kingdom in just 1 year. So again, that's something that we really need to be concerned about, because with the extremely high price of food and the extremely high price of oil, it's eating so much into everybody's paycheck that, again, that's inflation in its most simplest form. And that's one of the major reasons why you need to be in the hard asset market. The other thing that you want to be concerned about is the potential of a massive drop in stock prices. Again, we could see another crash that resembled the crash that we saw in 1980, and the reason that in 2008, and that's primarily because of Greece. Now, some of the top experts in the world are 100% positive that Greece is going to default. But as Randy said at the beginning of the show, Spain is in just as big a trouble because of their real estate market, and so is Ireland, and 14 other countries. In fact, if you get the newsletter this week, it's packed with information on the sovereign debt situation, and it's going to give you indications as to what's going to happen next. So there's 21 countries that are likely to default within the foreseeable near future. They're saying that a civil war could break out. And you saw that actually on the news this week in Greece, that there was rioting in the streets because of social services being cut off in Greece. That will happen all throughout Europe. And the fact is that as these countries continue to get into more and more financial problems, it's a domino effect. And again, when we bring up the Lehman situation, just so you know what that was, when Lehman Brothers went bankrupt in 2008, it almost caused the biggest financial disaster of all time, because there was about $4 trillion about to be pulled out of the money market funds, and the only thing that saved that was the fact that the FDIC, which is the insurance company in the United States that insures bank accounts. Now, an individual bank account at that point was insured up to $100,000, meaning that if you had $100,000 in the bank and that bank went under, the FDIC would reimburse you that $100,000, but anything over that, you would lose. Well, because of the Lehman situation and the money that was coming out of the banks at that point, what happened is that they raised the insurance up to $250,000, and that settled things down a little bit. Otherwise, we would have seen $4 trillion pulled out of the money market funds and out of the banks, and people would have buried that money in the backyard in mattresses type of thing. So we're now back in the same situation. Some of the experts feel that Greece is about to erupt, and basically that's going to cause another Lehman situation. But add to the fact that you've also got Spain, Ireland, Italy, and several other countries in Europe, not only and including England and including the United States. So all of these countries at this point are on the verge of financial disaster, and it's happening all at one time. So again, if you're sitting in the stock market, if you're sitting with your assets in the paper asset market, I would be extremely concerned if I was you. Again, I understand that it's difficult to liquidate stocks for tax reasons and things like that, but the bottom line is that you'd be better off in cash and making no money than the risk of having your money sitting in stocks at this particular point. You've got countries that are going bankrupt. You've got currencies that are not going to be here anymore. And again, we're going into an inflationary time that we have never, ever seen anything like this. And again, with oil prices where they are and food prices skyrocketing and all these natural disasters happening around the world, again, my strongest recommendations are still to buy gold and silver and diamonds. In fact, silver at this level at $35, $36 is a steal, because ultimately we believe that silver will be $150 to $250 metal before this whole thing is over. And we believe that this rally will actually happen over the next 5 years. So we are nowhere close to the top of the gold and silver market. And the fact is that we're really only getting into the inflationary aspects of the market, which is the real reason that we recommended gold and silver in the first place. So this year, what we anticipate, and again, nine years out of 10, the market is going to trade in a range during the summer. Everybody's on vacation in Europe. They take month-long vacations. The markets are thin. Not a lot of news coming out of the market for most traders, so they take off on vacation. And the markets normally trade in a range, and silver will trade between, $33 and $38 on a normal situation during these particular summer months. However, because of what's happening in Greece and a possible default there, along with Spain and Italy and Ireland, we could see a resemblant market to what happened in 1982 when Mexico defaulted and the price of gold during the summertime doubled within 3 months. So don't be out of the markets at this point, because, again, you can't afford to be out of the markets, and we're not saying to trade the gold and silver market and be jumping in and out of the market. If you had bought silver at $4 and bought 10,000 ounces back 10 years ago, you were in the silver market for $40,000 and you had 10,000 ounces. Recently, that $40,000 was worth $500,000. And, again, if you're sitting in the market for the right reason, which is all the reasons that we've outlined today, and with inflation coming up, you're going to see massive moves in the market. We could literally see silver break $50 this summer, and we could literally see the market go to $60, $65. We could see gold go to $18.50, which we feel very comfortable that gold is going to hit. And we're getting a massive rally in diamonds. So all the hard asset markets that we've recommended to you are still very strong and looking like they're getting ready to erupt. And again, I'm not saying I'm thinking that this summer in July, with all these situations happening, we could see a massive run up in metals when the market is thinly traded and people aren't paying attention. So again, money never sleeps. And we're on top of this. And even though, the markets can trade in a range, we're still here every single week. We've been doing this radio show for 10 years, and Randy and I have never, ever missed a radio show. We take this extremely seriously, and I know our listeners do too. And again, the purpose of the show is to help our Canadian clients and listeners to do the right thing. And the right thing at this point is not to speculate, not to over-leverage yourself, and be smart about what's going on. You've got countries and currencies that are going under. Get into the hard asset markets, buy gold and silver. I think silver is a screaming buy at this price, and again, it could literally double between now and the end of the year.
Only one company Harold recommends that you deal with when it comes to investing in precious metals. They're a Canadian company. Their name, Worldwide Precious Metals. WWPMC.com, the website. Telephone number to connect with them, 1-866-623-2002. 1-866-623-2002. If you are online, go to their website. I think you're going to be very impressed. WWPMC.com. You can sign up for our free weekly newsletter. You can see all the different features they have that are there for you. Speak with them. Learn about investing in precious metals. Get your name on the list for our free weekly newsletter. We send it out free of charge via email. It's a must-read every week. It's the companion to our radio show. You can go through it very, very quickly or delve further and spend hours. It's really your choice, but we're going to keep you up to date via the radio show and the newsletter. The telephone number, 1-866-623-2002. David Rosenberg from Gluskin Sheff came out this week and said about $1 trillion of paper equity wealth has been wiped off the map in the past 6 weeks due to what's been happening in the stock market. One of the stories that really caught my attention this week, Jim Sinclair came out and said, basically, you're out of your mind if you sell gold now. And Jim Sinclair, we had that story last week. He believes that gold could go to $12,500 based on the U.S. balance sheet. Rob McEwen, who is an executive in the mining industry, one of the top people in that field, he came out this week and said he anticipates gold will continue its run and will definitely hit the $5,000 mark. Silver, he says, will reach $200 an ounce. That from Rob McEwen. Also, one of the top stories on the gold side of things this week, Standard Charter came out and made a big, bold